Okay, we can start. Good morning. Welcome to the Genghis Weekly Investor Briefing. In this briefing, we give you the highlights of the key events in the last business week and tell you what to expect in this new week. And today with us, we have our very own, that is Melody Ndanu, taking us through the presentation with support from Wesley Manambo. And should you have a question, you can maybe check in that toolbar section in the Q&A area and post your question there. It will be answered after the presentation. And maybe we should hand it over to Melody, but before we do, this is the first webinar after the new financial year, that is 2021-2022. Maybe Melody will tell us more about it. Okay, over to you, Melody.
Good morning, Daniel. Thank you. So Mr. Churchill will be away today and next Monday, but he'll be back soon. So let's start with the macroeconomic review. So the latest Kenya economic update from the World Bank projected that the 2021 real GDP growth will go down to 4.5% from the initial 6.9 that was forecasted in November of last year. So the World Bank is expecting the growth in the next 2 years to average around 5%, to be bolstered by upturn in industry, supported by the reopening of the economy and capital spending. Also is the moderate recovery of services with the vaccinations ongoing. And then also from adequate harvests and sales, we've seen that the weather has been favorable and the agricultural sector has been doing well. So also on that, on the demand side of it, they see that the private consumption is expected to continue recovering with the pickup of wages and household incomes. The World Bank also announced that it's going to give additional financing for COVID-19 vaccines to amount to around $130 million. And this funding is expected to pay for vaccine doses for 6.13 million individuals. That's 12.5% of the population. So when we look at the June inflation rate, it came at 6.32. That's the headline inflation rate. So this has been the highest inflation in the past 16 months, and it's in line with the expectation for the second quarter of the overall base effect of having this effect rather. So to be exact, from quarter 2 2020 to quarter 3 2020, there was a disinflationary trend in that the inflationary bias last quarter has trended higher. So core inflation had a muted growth in June, with food inflation cooling off month-on-month basis to 13.5 to 8.5 rather, with fuel going to 13.5%. So overall, the headline inflation print is a final print that is adjusted to the rate of inflation applicable to select excise goods. So specifically, the average inflation ratio was 5.34, and per Finance Act 2020, the adjustment of this rate is on specific goods should be approved by the National Assembly during this month. So moving onwards to the KRA financial year 2020-2021 performance, in spite of the ongoing economic challenges due to the COVID pandemic, KRA surpassed its target for its revenue target after 8 years since financial year 2013-2014. So it reported an overall collection of 1.669 billion, comprising of 1.544 billion in exchequer revenue and 125 billion in agency revenue. So we note that there's an overlap in in ordinary revenue, which includes the main revenue tax streams coupled with non-revenue tax items such as investment income. And on the other hand, appropriation in aid excludes agency fees collected by like the road maintenance levy, which is tracked by KRA. So coming up in the next economic calendar is the June Purchasing Managers Index, the PMI, which is supposed to come out on the 5th of July. So the prior one was 52.5. So this Purchasing Manager Index, it's last, like the previous one, had rebounded from 41.5, and this was due to the lifting of previous containment measures that were salient at that time. So usually a value above 50 shows positive sentiments, while in the private sector rather, while a figure below 50 shows a contraction sorry, in sentiments. For the fixed income review, the secondary markets declined 28.2% overall to 22.6 billion, and the trades were mostly on the infrastructure bond segment. For the T-bills, they pardon. For the T-bills, the yields declined at a rate of around 100 basis points, and the yield for the 91-day T-bill went down to 6.728, which is below the CBK benchmark rate of 7%. Though we think that this is just transitionary as a new fiscal year comes in. So more in line with the expectation, it will, due to the inflation, it might gradually lift up higher, and with the liquidity now normalizing. So in our view, we believe that the 91-day T-bill will edge up to the 7% psychological barrier. Looking at liquidity trends, the average interbank rate went up marginally to 4.89%, and the CBK Trades Open Market Operations, that's OMO, it mopped up 75 billion in the 7, 14, 21, 28 day term auction deposits during the course of the month, the week. So open market operations is whereby the CBK comes in and assesses the liquidity level in the market and mops up in liquidity in the case of excess liquidity, or if there is tight liquidity rather. So we noted that the market has been highly liquid, and this heightened liquidity reflected in the very small increase in the average interbank rate to 4.989%. So in the week, the CBK had announced the results of the tap sale. So just to give a brief preview, a tap sale is where CBK sells bonds or other short-term debts from past issues. So these bonds are issued at the original face value, maturity, and coupon rate, but they're sold at the current market price. So it had a target of 50 billion, and the tap sale realized 37.4 billion on these dual tranche issues. So that was a performance of around 74.8%. So CBK also announced that it's going to be reopening the FXD1 2012-15, FXD1 28-15, and FXD1 21-25. So this money is supposed to be for budgetary support, and they're targeting about 60 billion. So so we note that they're going to incur a withholding tax of 10% because these papers are above 10 years tenor. So just recap that the coupon rate has an inverse relationship with the yields, in that if the coupon is higher than the yield, the price will be lower at lower than 100, while if the coupon rate is higher than the yield, the price is higher than 100, which is a premium. So you can see here clean price and dirty price. So basically the dirty price is a price that includes the accrued interest based on the coupon rate, and the clean price does not. Basically that's what the difference is. So for the week's trades, we are recommending a buy on the FXD1 2019-5 at 10 to 10.2% levels. We are of the opinion that due to the elevated liquidity levels, as we are rolling in now into this new financial year, the longer term issues will dominate the primary bond market at the front end of the borrowing cycle. So as such, we anticipate that investors will express more conviction towards the short end. So that's the shorter end dated papers. So now I'll move on to the equities part, where my colleague Wesley will take us through.
Thank you, Wendy. Good morning to you. The market is mixed as signaled by the benchmark indices. The Nairobi All Share Index shared 0.2% week on week. The NSE 20 gained 1.5% week on week. Volumes were relatively low as activity dropped 24.2% week on week to a turnover of 2.6 billion. On the gainers, we had Nairobi Business Venture extending its stellar run to yet another week, realizing a 44.48% gain in share value, closing the week at 12.05. That's remained bullish at the back of the announcement on proposed acquisition that we see the counter heavy approval of regulators and shareholders. Suffice to say, the business restructure on the counter echoes the structural diversity of Delta International, which is a holding company in real estate, logistics, manufacturing, and energy. It goes without saying that Mr. Sony, the chair of Delta International, the CEO of Nairobi Business Venture, will bring his rich experience and expertise to NBV in coming days. Also, we had Capturity and Sport in the week's top movers on a 13.9% share appreciation on the back of financials. The counter EPS plunged 63.7% year to 90 cents, attributed to weakened demand against the backdrop of the pandemic. However, their balance sheet grew 7.2% year to 2.1 billion, and a first and final dividend of 10 shillings with a book closure of 21st this month was proposed. On the losers, we had Liberty and BOC Kenya.
Wesley, just a minute.
Top gainers to this week, top losers.
Wesley?
On foreign.
Wesley, maybe you can check on your sound. It's not clearly audible.
Oh, sorry. You can hear me now?
Yes, yes.
Thank you. So on the equities, the gainers we had the Nairobi Business Venture, which exerted its stellar run. Yes. Sorry for that. On the foreign participation, foreigners exerted their dominance when they accounted for 50.5% of the week's turnover. Foreign investors had an overall net outflow position of 303 million and accumulated on Safaricom and Equity while exiting on KCB, EABL, and BAT.
Guys, may I suggest that maybe Wesley could use Melody's device? I'm sorry, Wesley. Today, your Chromebook, I think the audio is not the best, but I suspect Melody is using the webcam. So if you could switch, I think we'll be able to sort out the audio issues.
Oh yes, sorry for that. Sorry for that. On the, let me go back to previous.
1 second.
On the equity.
Perfect.
Yeah, on the equity, our recap for the equities were, the market was mixed as signaled by the benchmark indices. The Nairobi All Share Index shared 0.2% week on week, while the NSE 20 gained 1.5% week on week to 1920.42. Volumes were relatively low as activity dropped 24.2% to a turnover of 2.6 billion. On the top gainers, we had Nairobi Business Venture, which exerted its stellar run to yet another week, realizing a 44.48% gain in share value, closing the week at 12.05. Investors remained bullish at the back of the announcement on proposed acquisition that will see the counter venture into cement manufacturing, heavy vehicle repair, and airline servicing on approval by regulators and shareholders. Suffices to say, the business restructure on the counter echoes the structure diversity of Delta International, which is a holding company in real estate, logistics, and manufacturing and energy. It goes without saying that Mr. Soni, the chair of Delta International, who is coming in as the CEO of NBV, will bring his rich expertise and experience to NBV in the coming days. We also had Kapchura Tea, which earned a spot in the week top movers on a 13.9% share appreciation at the back of its financials. On its financials, we saw that its EPS plunged 63.7% year on year to 90 cents, attributed to in part by the weakened demand against the backdrop of the pandemic. On the losers, we had Liberty and Liberty, which flopped from last week's top gainer to this week's loser. On foreign activity, we saw the foreigners exert their dominance, accounting for 50.5% of the week's turnover. Foreign investors had an overall net inflow position of 303.9 million and accumulated on Safaricom and Equity Group, while exiting on EABL, KCB Group, and BAT Kenya. And NSE performance against its African peers, we saw its week on week go down by 24 basis points, and its price to earnings ratio was 13.3 against its African median of 10.9. Its dividend yield was a little bit lower, being 2.1% against the African median of 5.2%. On our corporate calendar, we have Kapchora Tea and Williamson Tea, both with first and final dividends of 10 shillings, with a book closure of 21st this month. Also, on our trading recommendation, we have a long-term buy on Kengen with a target price of 7.11 at the back of the current expansion initiatives and the dividend play it has. And out of consensus trade, we have a speculative buy on Nairobi Business Ventures based on the sentiments above. To you, Melody.
Thank you, Wesley. Sorry, just 1 second. Sorry, 1 second, please. So we've seen, so there's some developments in the financial sector. We've seen that the KDIC, that's the Kenya Deposit Insurance Corporation, it introduced its implementation of the risk-based premium assessment model. Sorry, 1 second, please. So this risk-based model was rolled out for commercial banks after 1 year suspension. That was last year due to the COVID-19 pandemic. So it was suspended, or rather delayed, so that banks could have their books in order, so that now they can start this new premium model. So the primary objective of this risk-based premium system is to provide incentives for banks to avoid excessive risk-taking. So this model comes into play at a time when deposits grew about 13.6% last year to around 4 trillion. And this new risk-based model, it incorporates a flat base of 0.15% of deposits held by each lender, plus an additional factor. So now it's anticipated that this new risk-based model will mitigate risks in the financial banks and curb high risk taking by lenders. Because now if you are high risk, you will pay a higher premium to the fund compared to relatively stable banks. So KDIC had last year also raised the maximum compensation to depositors in case of a bank failure to 500,000, up from 100,000%. I mean 110,000 shillings, sorry. Just a quick diversion from that. We saw that KCB, the share price has been on a downward trend this last week, closing at 42.5 from a high of 44 at the start of the week. This, I presume, is mostly due to the fact that it paid its dividends on the 26th of June. For equity, it had been having a mixed momentum in its share price, but it's still quite high above its 52-week high, its 12-month high of 45.65, closing at 46.7. So back to the sector developments, we saw that I&M launched its wealth management and advisory business that's going to target high net worth individuals. They're also going to be providing offshore investments to their clients through Bank of Mauritius. No, it has a subsidiary in Mauritius. Now this unit is going to be separate from its I&M capital arm. So we remember that I&M actually had a bonus share mid this year, where it approved a dividend of 2.25 down from 2.55 and a bonus share for every ordinary share. So the book closures for that was 10th of May with the allocation of the bonus shares on the 21st of May. So we also noted that the 20% excise duty on fees and commissions and on loans has been reintroduced. And this will see banks pay around 7 billion annually, which is 20% of 35.871 million of commissions earned last year. So now this comes at a time when things are considered to be quite expensive for households and businesses, and it's going to add to the cost of the cost of lending to borrowers, as banks will transfer this charge to them. So the first time there was an introduction of this excise duty, it was in 2018 that saw a triggering of increasing costs in both local and international over-the-counter withdrawals, and also ATM fees and operating fees. So for this excise duty, there's been a lot of back and forth between disputes between various financial institutions and KRA, and the Tax Appeal Tribunal ruled that these fees paid qualify and as interest and they need to be charged. So lastly, as my colleague touched on, Jubilee shareholders approved the share buyback option after they held the AGM to amend the company's articles of association. So this made the price move to around 37.5 from 313, the previous week.
So we can see that the market is reacting to this news. So for its performance, it's one of the it was the only listed insurance company that posted a profit and paid dividends during this tough financial year of 2020, because most insurers had been hit by reduced returns from real estate and falling values at NSE. That brings us to the conclusion of the equities and fixed income side. Back to you, Daniel.
Thank you very much, Melody and Wesley, for the wonderful presentation. Now we go to the questions. Let me just check. Jafet Chelimo is asking, is there a provision for one to place money in a market fund on a fixed duration like 6 to 12 months? This is not your forte, but I think you can handle this.
For me, I don't think you necessarily have to hold it for 6 to 12 months, because market funds earn interest on a daily basis. So you can decide on how long you want to hold it. Maybe Daniel, you can help me out. Am I near the curve there?
Yeah, I think that you're right, because in a money market fund, you decide the amount of time you want to invest your money in the fund. So should you say it's 6 months, it will be 6 months. Maybe let me check this. There's a new, Elvis Ayara is asking, can I buy Samia Africa?
So unfortunately for Samia, we don't actively cover it at the moment, but maybe we can find out more from you later. But we know that the founder died recently, so that might have an effect on the share price in the short term.
I think maybe I have a question of my own in addition to this. Centum has been going down even before what happened. Is it likely to go up, or are they likely to change their business model?
Wesley would like to tackle that one. One moment.
Oh yeah, sorry, but yeah, on Centum, well, Centum, we really have to wait for the group's results. Yeah, there was a delay, and they said they expect at least a 25 dip in their net profit. On Friday, they released the Centum real estate financials, which we saw a 71.7% drop in net profits to 2.3 billion. That was the first time they released the real estate financials. But knowing Centum's portfolio weight on real estate, which according to their proposed Centum 4.0 restructure is approximately 45 to 55% of the gross assets allocated by the group. So in view of their released financial against the group, we really have to wait for the consolidated group financials so that we can see the trajectory of the price in a long-term perspective. But on the short term, investors are speculating on what might be based on the real estate financials.
Okay, thank you very much. Kamau is asking, this NBV rally is artificial as the company hasn't produced even one bag of cement. Will you still advise a buy?
Well, let me also check that one. Yes, on NBV, investors are speculating on the news. You know, there are several factors that affect share prices. There are the results, there are fundamentals, there are news, positive news, a news article that may have a potential uptick in future growth. Investors usually buy into the belief of the company, into their future prospects. So basically, you're asking if NBV is a good buy based on their business restructure. You really can't figure out the performance of the company in the future, but you can buy into the company's belief of this. I think they are planning to invest 15 billion on this segment. Yes, they don't even have a plan there yet, because what they were acquiring is an 11.33 hectares of land in Mavoko to put up the cement manufacturing facility. So yes, you can decide to buy into the belief of the company in that in future, these prospects will come to fruition and you'll profit with them as they take a profit too. Thank you.
Thank you, Wesley. Please don't go. I think there's another question here for you. What are the main counters that you cover? That is Bradesh Shah asking.
So mostly at the moment we're covering banks, Safaricom, EABL. For the banks, it's KCB, Equity, ABSA, Stanchart, and also Safaricom and Kengen as well, and EABL, and Kenya Re. No?
Okay, thank you for that. And Monica Ngaru is asking, why is there a continuous outflow of foreign investment participation?
So for foreign participation, most of these funds have a target that they set in their investment investment policy. So let's say, like, if the price of KCB goes up past a certain price, you'll have to offload some of the shares. So that's why you might see that some of them are reducing their holding in certain companies. It could also be just from the price action. Maybe they're taking, it's profit taking, like we've seen that KCB now has paid their dividend, and maybe that's what they were waiting for, and now they're leaving their positions. So basically that's what usually happens. These funds have their own investment policies and their own investment structures that they follow. So I think that should cover.
Okay, Stephen Olo is asking, when is EABL realizing their results, and do you recommend accumulating at the current price?
Yeah, let me take that one. EABL is expected to release their results towards the end of the month. And yes, there are very many things after looking at the model and the performance lately. We expect mainstream spirits to have a really good rally because they're not affected much by the COVID-19 containment measures due to their ease of offtake from convenience stores, supermarkets. So the performance, we expect it to be quite good. And based on its target price on our playbook, we recommend a hold on it. So there might be a dividend which will make the price rally further, and you might earn something from the earnings too. So EABL is a good stock to have a hold on it.
Okay, thank you very much. And Kamau is asking, what will the impact from I&M have in view of the recent share split? Like, what will the new products from I&M have in view of the recent share split?
So if I understand this correctly, I think it's about the bonus share issue.
Yes, yes.
So for the bonus share, we're going to see, essentially it's supposed to promote liquidity on the counter, and also it's going to increase the amount of like the number of shares outstanding. So basically it's just going to promote like liquidity in the stock.
Okay, thank you. Irene Karaoke is asking, have KCB, ABSA, and Safaricom paid their dividends? And if not, when are they doing so?
I think for Safaricom,
Yet to pay.
It's yet to pay. When is book closure? On the 30th. For KCB, they had already paid theirs on the 26th. And for ABSA, I think they did not recommend a dividend for the full year 2020.
Okay. Wallace Mburu is asking, what are your price projections for Kenya Power?
So for Kenya Power, Sorry, 1 second. For Kenya Power, unfortunately, that one we don't really follow much on it, or mostly we focus on KenGen. But we've seen that the World Bank listed it as one of the state-owned enterprises that need to undergo reforms. So in the long term, it may be a good buy, but right now they have a few issues like with the PPP, the purchasing agreements. The World Bank stated that these were more to the favor of KenGen than to Kenya Power, and they also have a lot of debt that they need to sort out. So in the short term, it's not necessarily a good buy, but in the long term, after the reforms have been done, it may turn out to be a value stock. Also, they recently announced that they opened a new website where you can apply online for connectivity, which is supposed to remove brokers from the process and make it easier and cheaper.
Okay, thank you very much, Melody and Wesley. Despite the technology challenges, we've still made it possible for us to have this presentation. And all I can say is congratulations, and you all have the grit. And
thank you.
For the for the participants, we thank you for setting out your time to attend this presentation. And with the information that you've gathered, now you can make your business decisions with more confidence. And we wish you a happy week, a happy investing week. And should you have any question, please don't hesitate, but share with us via our social handles. And also, while at it, you can also download our mobile application called Jikuze, where you can be able to implement what you learn from here, that is buying and selling of shares via your mobile phone. Okay, thank you very much, and we'll see you in the next episode. Okay, bye-bye.
See you.